Hey everyone, in this video, I wanted to talk to you about the number one reason why I think investors are talking about Amazon stock, and that is AWS. So let's get into the details. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. Right, so the big thing from Amazon's AWS in its latest quarterly update was the year-over-year revenue growth acceleration. This number jumped up to 17.2% in Q1, and that was up from 13.2% in Q4. Prior to that 13.2% growth rate, it was 12% and 12% for 2 straight quarters. And before that, the growth rates were much higher. So Amazon's AWS revenue growth rate took a kind of dip like that, and then now it's rebounding up higher. So this jump here was the biggest one over the last 1, 2, 3, 4 quarters, I want to say. It was 12, 12, 13.2, and now 17.2. And so you see that bottoming out and jumping up, and management is going to discuss why that's the case here. So management saying that companies have largely completed the lion's share of their cost optimization and turned their attention to newer initiatives. If you recall, for several quarters, I had been talking about the reason why AWS's growth rate was decelerating was because enterprises worldwide were fearing an oncoming recession, and so they were looking at areas they could cut costs. One of the areas they cut costs was in AWS spending. They communicated with Amazon. They told them that they feared their revenue was slowing down, so they wanted to cut costs, and Amazon was helping companies optimize their spending on AWS, and that led to a slower growth rate. But what management is saying now is that that's largely behind them, that they did the cutting where they needed to, but they're not so worried about a recession anymore. The economy so far in 2024 is much hotter than expected. In fact, it started off the year so strong that investors worried the Federal Reserve would need to raise interest rates even more. Coming into the year, nearly everyone was expecting the Federal Reserve to cut interest rates at least once, maybe twice, maybe 3 times, right? My expectation to come into the year was 3 interest rate cuts. I've since revised that lower because the economy was so strong in the first 3 months of the year. I now think there's only going to be 1 or 2 interest rate cuts in 2024. So recession, those fears have largely moderated and gone into the background. While it's always a possibility, it's not as front of mind as it was last year, early 2023, mid 2023. Businesses were really afraid of a recession. That's why you saw many of the companies, Amazon included, Alphabet, Microsoft, Salesforce, tens of thousands of job cuts, all of them announced, right? Plus other job cutting measures. And that was the mood around enterprises worldwide is let's prepare ourselves for a recession. Let's cut spending, let's save costs, build up a war chest just in case. But now, what Amazon is saying and what I've been seeing from businesses in the first 4 months of the year, I should say, is the recession fears are largely in the back of mind now. It's a very small probability, 10% or below of chance of recession in 2024. So now businesses are not cutting costs anymore. Now they're marching towards modernizing their infrastructure, moving from on-premises infrastructure to the cloud to save money and to innovate at a more rapid rate and to drive more developer productivity. The pandemic and the fears of a recession, the uncertain economy, distracted from that momentum, but now it's picking up again. And that's great news for Amazon, and we saw it in the acceleration of the rate of growth in the AWS. It went from 12, 13.2 and now 17.2. You could see businesses ramping up spending again. Now, of course, the bulk of that is coming on AI, right? And Amazon acknowledging that they see considerable momentum on the artificial intelligence front. where we've accumulated a multi-billion-dollar revenue run rate already. It's only been a few quarters of artificial intelligence really gaining widespread popularity, and Amazon has already accumulated a multi-billion-dollar revenue run rate, as have other companies that are dealing in artificial intelligence. Amazon saying that they have the broadest selection of NVIDIA compute instances around, but demand for their own custom silicon, Trainium, and Inferentia chips are also quite high given its favorable price performance benefits. I've talked about this in the past also. Amazon offers NVIDIA chips, right? They have that if that's what you want. But those are, high cost, high price. That's the leading edge, right? Not every company wants the best performance in terms of, development and training and inferencing artificial intelligence. Some companies want the bargain option. Some companies want the value option. And Amazon is saying that its own chips, Trainium and Inferentia, give a solid price performance benefit. And so businesses are choosing that. And larger quantities of those chips are coming in the second half of 2024 and early 2025. So Amazon's going to make these more available in the second half of 2024 and early 2025. Now, Amazon's chips business is not going to rival NVIDIA. It's not going to come up to NVIDIA. But what it does is it provides businesses options. It gives them another choice. You don't have to go with the most expensive choice. You have this more budget option, and that's going to make it more available for more businesses that maybe couldn't afford to build on NVIDIA, to use NVIDIA chips, especially because NVIDIA chips are so highly in demand right now. NVIDIA's continued to say how demand for their chips far exceeds supply. And you could see it here where Amazon is basically bragging that they have NVIDIA chips available because they're such highly sought after that Amazon is mentioning it in their own conference call. And Microsoft mentioned it, and Alphabet mentioned it. And so these companies are mentioning that they have NVIDIA chips available. Like, our relationship with NVIDIA is good. They sell to us. They make their products available to us. That's how sought after NVIDIA's chips are. And I'll just give another mention of NVIDIA stock, how I've had it as a top stock to buy all year long. And you can see why that's the case. Time and again, from nearly every company that's dealing in artificial intelligence, discusses how powerful NVIDIA's chips are, how highly sought after NVIDIA's chips are. So that's more of another video, but I just thought I'd point that out here again, and how Amazon is working with NVIDIA, and Amazon is seeing demand for its artificial intelligence and its AWS segment soaring on the back of rising momentum for artificial intelligence, but also because of what I discussed at the start of the video, and that is that companies are not afraid of a recession as much anymore. So they're unlocking those budgets. They're, not fearful as they were in early, mid 2023. And they're kind of seeing that, the growth rate might be slower, but consumers keep spending. Jobless rate is low. The economy is performing robustly. So we don't really have to be afraid of a recession, at least not for 2024. So that's why I think a lot of investors are talking about Amazon stock, is that reacceleration in the growth rate in AWS, which is by far Amazon's most profitable segment in terms of operating profit margin and total operating income. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.